What's up, guys? Welcome back to another video. Now, Bitcoin fell by nearly 10% on December 11 in the space of just 1 hour. Obviously, that's quite a big drop if you think about it, especially considering how quickly it happened. According to a crypto futures trading platform, CoinGlass, this sudden drop resulted in more than $450 million worth of long liquidations. The decline also wiped out some $1.2 billion in open interest in BTC futures, which currently sits at around $20 billion. Now, it's important to remember here the volatile nature of Bitcoin, which is full of highs and lows. So while this drop might seem alarming, it's not entirely unusual. The fact is that Bitcoin, like other cryptocurrencies, has had periods of spikes followed by sharp declines. This recent dip from 43.9 to the mid 40K level, which by the way prompted crypto whales to grab 13,000 plus Bitcoins worth more than $500 million. So this recent nosedive could be seen as part of these cycles. Also, keep in mind that different factors can impact the price of BTC. For example, price drops often materialize as a result of low liquidity or volume, especially during weekends. This was evident in the December 11 9 or 10% plunge. Also, we have to understand here that it's not all doom and gloom. The fact is that despite the recent dump, which again sparked a surge in liquidations, Bitcoin's price has steadily appreciated over the past 8 weeks. This tells us that the current dip, while bearish in the short term, could just be a healthy corrective move necessary for some much needed consolidation rather than a sign of major trend reversal. Now, I'm not suggesting here that there will be price fluctuations in the short term. As already mentioned, price volatility is inherent to BTC, but in my view, and guys, let me clarify here, this is not financial advice, just a personal perspective, but I do believe that given the potential for Bitcoin to soon enter, if it hasn't already, to soon enter a new super cycle, an event often tied to its halving cycle. So given this possibility, BTC might experience, in my view, an extended bull run, possibly testing its previous all-time high of $69,000. And now in the short term, examining the daily chart presents two possible scenarios. The first one suggests that Bitcoin, having consolidated above the $38,000 level, could continue its ascent towards the $50,000 mark. Needless to say, this scenario requires minimal analysis as Bitcoin's bias has clearly remained bullish since it found a weekly bottom above the 16K area. And by the way, back in March, I made a brief analysis on the possibility of BTC hitting the $40,000 range. If you are interested, I'll provide a link to that analysis in the description below. Now, getting back to the point, and as I was saying, the trend towards the $50,000 level is the first possible scenario. The second scenario, on the other hand, implies that Bitcoin might struggle to pump through its yearly high of 44.7K and could reverse its course downwards. In other words, the price action up here could limit or pause the expansion of this range. And now my opposing argument here is based on the notion that following a somewhat lengthy period of consolidation and market upswing, the distribution phase is when major Bitcoin hodlers reduce their long positions and initiate short ones, preparing for a possible downturn. Therefore, despite what may appear a solid demand surge over here, which could give a misleading hint about the short-term trend direction, the possibility of a downward momentum continuing until the price hits the 33K range is there. If this level is reached, it is likely that Bitcoin will pivot and initiate an upward retracement, first reclaiming the $50,000 area, followed by the $52,000 level. Once the market hits this price bracket, it is likely that it will aim for record highs, irrespective of whether it's in the short, medium, or long-term time frame. Of course, there will be numerous shifts and variations within this particular price range, but eventually, and let me re-emphasize here again, this is not financial advice, just my subjective viewpoint, but it seems inevitable to me that we will revisit the 69K mark. What I'm doing here, folks, is no different than any other trade. I'm forecasting, anticipating, and then projecting. And then this next video serves as a perfect illustration of this process. All right, guys, that should do it for today. As always, thanks for watching, and until next time.